Okay, I think we might have a few more hop in the next couple of minutes, but in the meantime, I think we're going to go ahead and get started. Welcome, everybody. My name is Zach Olson, and I am the project manager of new initiatives at the Iowa Center. It's Tuesday, so that means it's Small Business Essentials. If you've been here before, welcome back. If you haven't, just a couple of quick notes, One, we are recording this today so that we can share it on our website later. And two, if you have any questions or comments, please use the chat and the Q&A functions at the bottom of your screen. We'll stop every once in a while to answer those questions as we go, and we'll spend a little bit of extra time at the end, 5-10 minutes to answer general Q&A. Okay, so this is a topic that we've covered before, and we are back again today to talk about why it's so important to establish and maintain a good relationship with your local business banker. That relationship is vital to understanding and tracking your cash flow, your financial security, and accessing all of the resources available to your business. So here today to help us with all of that is Lisa Moss. Lisa's career in banking started back in 2004 as a teller on the retail side, and now almost 17 years later, she has worked her way up and over to Bankers Trust as their government guaranteed lending specialist. She's the bank's resident expert for the SBA 7A loan program, in addition to offering several other lending services each day to her small business customers. Lisa, thank you so much for being here today. I'm really looking forward to this.
All right. Thank you for the introduction, Zach. That was very nice. And I guess we will just get right into it about what you need to know with working with a bank. So on slide 1, there is my name and my title. Most of my day-to-day is working with SBA guaranteed loans with Bankers Trust, but I do work with lots of small businesses that are starting out with figuring out what kind of lending they might need, what bank services they might need, and a lot of times those aren't going to be SBA guaranteed. So I kind of work with a bunch of different variety of businesses. So on the next slide, so you're ready to connect with a bank. Hopefully this discussion will help you become a little bit more prepared when you're considering what you would like for a banking partner. We'll kind of go through some of the financing options, which you need to know to get started. And then as you're looking through lending options, maybe how much is too much. All right, slide number 3. So here are some of the topics. We will be discussing possible sources of business funding, not just with a bank necessarily. We'll look into what a lender is looking for, which is, if you've taken any other Iowa Center classes, you know that the 5 C's of credit are something that everybody talks about. We will also be talking about your credit score and why it matters, what's included in a loan application, and the importance of a business plan, your cash flow projections and assumptions, and then, of course, for you as the business owner to understand the details, which includes all of the numbers. All right, next slide. Things to consider. So you've decided that your business needs support from a banking partner, and so you're trying to figure out what the next steps are, but where do you start? With all the information out there, you can do online. There's probably a bank or credit union or some type of financial service on every street corner. So where do you go? So let's get to the next slide and think about what you should be thinking about as well. So it's always good to just think through not only what your lending needs are, but also what you're going to need to make your business function, financially speaking, in a checking account. So first steps are kind of trying to figure out what needs that you have on that side of it, and then maybe think through what bank or credit union, for that matter. I work for a bank, but this presentation is definitely to educate you, not necessarily promote me. So the first step is always trying to figure out what's going to be the best fit for you. So you can, go into a bank, talk to your bank officer about your business, ask about loans that the bank can provide, but also talk to them about checking accounts, savings accounts, what type of products they have on their checking accounts that can help you with payroll, help protect you if you have, like you can do positive pay files, things of that nature. And then just make sure that you are showing them that you understand the numbers that are behind your business, like you understand exactly how it all connects and operates. And down at the bottom, it says that remember that the only thing that we know about you is the story that you're going to tell us. And we definitely like to know your story because it helps us just to get a better understanding of what your vision is, because it is your business after all. And we are here to help you achieve your goals and dreams. So we need to know your vision. All right, so the next slide is, so what are lenders looking for? How do you get us to say yes so you can continue on with your business and the needs that your business has in today's market? The next slide also talks about what are non-traditional lenders. So of course you think of banks, but there's also a bunch of credit unions now that offer small business products and loans. So don't rule out credit unions if they might be a better fit for you. There's micro lenders that have specific dollar amounts that are given to them to lend to small businesses and startups. There's community-based lending programs, and there's also a community advantage lenders that can make loans under a special SBA business loan program. So the next slide is more geared to the traditional lenders, your traditional banks. So we all know the jokes about how cold-hearted we are as bankers. But if you think about it, the truth is that we exist to lend money. And if we lend money, then we make money, and we are for-profit businesses. So we truly, truly do want to say yes. It just, it just has to make sense. So we do get a lot of, jokes. They're probably earned, right, in the banking industry, but we really do want to try to say yes if we can. And we're here to work with you, listen to your story, and make it a structure that we can also live with that helps your business too. And then towards the last bullet point, there are agencies that regulate us. So we always have to make sure that we're balancing our credit risk against our bank portfolio, and then also what the regulators tell us we can and cannot do. So sometimes much as we want to say yes, we're kind of bound sometimes by, the regulations that are upon us. All right, so the next slide is where to get money for your business. So there's a few different places that you can look that maybe aren't just from a bank or a credit union. It can always be money that you've saved that you can just inject into your business. If you can find an investor, I know sometimes that is always popular because they might get a share, or an ownership percentage in your business. But with an investor, maybe those terms are a lot more flexible as far as, how they are willing to invest into you. You can also borrow money from friends or family. You can use any of your own personal resources, such as like a home equity loan, a line of credit. Those also can be additional money sources to get your business up and going, or continue to stay in business. And then the last bullet point that, of course, is more of a traditional business loan that could be through a micro lending program, a state or other local lending program, or of course, business loans from banks or credit unions, and sometimes they are supported by SBA. And now that I say SBA, if anybody has any questions specifically in regards to SBA, I don't really touch on that a lot in this presentation, but if anyone has any questions, if we have time towards the end, please feel free to ask. I can answer any of those questions as well. All right, next slide. So no matter who you're going to lend money for or who you're going to ask to lend you money, a lender is really going to be looking for, do they feel as though the owner has the ability to run this business well and willing to make it succeed? There's a lot of hard work that is put into running a small business, which I'm sure you probably all already know this, but you have to be, your own accountant sometimes, your own attorney, your own bookkeeper. You have to be all of the above to make this business succeed. So we just kind of want to know all that too, like what the history of the business has been, a description of your management team, their experience, if you have a management team. We just kind of want to get the full picture on what helps support this business and what makes it run on a personnel level. The next slide is also what matters most to lenders. So of course, if we're going to make a loan to you, we want to make sure that we are going to be paid back. So we want to make sure that the business has historically been financially sound or has projections and assumptions that show that it can be financially sound. We know that the owner probably needs to make an income, and we have to just put all of those factors into the loan request to make sure that everything is aligning, because we would hate to make a loan to you that isn't the best for your situation and actually puts you in a worse state later on down the road than actually helping you. Another thing we always look for is collateral. When we underwrite a loan, we always look at cash flow first on if we're going to do this loan, what makes it financially sound, how much can you afford to pay us back. We always look at the cash flow first as how we're going to get repaid. But we also know that things happen, such as a pandemic that nobody saw coming, and it's definitely impacting businesses. So when we're also structuring loans, we look for if our primary cash flow is no longer sustainable to pay the loan, then where are we left as a bank as far as our ability to, get this loan paid back to us? So then we always look for collateral. So what is something of value, an asset, property that can be pledged towards the loan, that if the cash flow dries up, we have something of value, something tangible that secures the loan that will help us then be able to weigh the risk if the cash flow dries up. The next slide is everyone's favorite, the 5 C's of credit. We really look at this. We look at the character, the capacity and the cash flow of the business, the collateral, which is tangible stuff, also personal guarantees of usually the owners, the capital contribution, meaning your skin in the game when it comes to how much you're willing as the owners to put into the overall picture of this business. And then the last one is condition, which I guess you kind of moved to slide 13 as well, and it lists out the 5 C's as well. So just to kind of, I know you've seen the 5 C's of credit before, but just to kind of go over them one more time as far as kind of how we are looking at it. The character is really important for a lender. Small businesses, like the owners, you are the business. So we really look at your personal reputation, and then just the general impression that you make on us and your integrity. So as you're telling us your story, we can really tell if you are passionate, if you are really behind this business with, everything that you got. We also like to understand like who you are. Have you lived in this neighborhood for a long time? Did you just move in? Are you going to have an account with us? Are you going to make us your bank, your primary relationship with us if we give you the loan? And then also to the next slide, do you pay your bills on time? We will pull a personal credit report on any guarantor of the loan. It doesn't mean that bad credit is necessarily something that you'll be turned down for, but it is kind of a predictor of, like the history repeats itself. So if you have problems in the past, what makes us think that, that those problems won't continue in the future? References, depending upon the loan request and what we're talking about. Yep, sometimes we do like to kind of, know like who references are, or if you have any, like in a business plan, you can put people that are helping you put together the business plan or just coach you through business. We do look for all those. We also look into your experience in running the business. That's important too. If you yourself haven't necessarily ran a business before, it's a good idea maybe to have a business consultant just to help you to understand what all goes into it. We think about those things as well when we're going through the initial loan request. The next slide, just kind of, I guess this is more informational for you, but your personal credit score, if you're ever curious, well, not that you can get your actual score, but just in case you didn't know, you can go to annualcreditreport.com and you can get a free report annually. And you can get those reports through the 3 credit report agencies, which are Equifax, TransUnion, Experian. Each bank pulls through a different one. I think a lot of the Midwest banks pull through Equifax. If you're getting a mortgage, they'll pull all 3. But typically, if you are doing business loans, whatever bank, whatever agency they use, they'll just pull one. How you get your credit score, I think you just have to apply for a loan and have your credit pulled, and then that institution can share your credit score with you. They can't necessarily they can't share with you the reports that they pull, but they can at least share with you your credit score. For you to see your report, you'd want to go to that annualcreditreport.com, and then you can see all of the different items that are showing up on your personal credit report. Okay, so the next slide is, I guess, just like what goes into your FICO score. When we talk about a credit score, if you ask yourself, well, how does that even compute? So here's kind of a pie chart of how it all breaks down and how it's weighted, if that makes sense. So payment history is the most weighty piece of the pie. And then the amounts owed are the next one. And one thing to keep in mind is, I know a lot of people might have a credit card or 2 out there that you might not use. So you think to yourself, oh, I'll just close it because then I just don't want this random credit card out there. What happens if somebody gets, that information and starts using it? It's a good thought, but just one thing to keep in mind is that we do look at how much credit you have available to you on your personal credit report, then in contrast to then how much of that is being used. So say you have, like $10,000 of credit available to you and you have $9,000 already used up, just something to keep in mind that maybe you don't want to close some of those open credit cards. Sometimes it just helps balance out that, how much do you have available to you and how much have you actually used. Let's see here. So the next slide is the higher the score kind of means that the less potential risk for the lender, because you've shown that you do pay off, or not off, but just continue to pay and on time your payments on the personal side to your existing creditors. So it makes us feel as though if we were to extend credit to you, you would be less risk with the higher of the score that you have. For Bankers Trust anyways, and it's different for every financial institution, we have a minimum credit score of 640. So if you apply with us for a business loan, if an owner / personal guarantor has a credit score of under 640, we are not able to move forward with that loan request. So just something of context to keep in mind when it comes to credit scores. So then in the next slide, if you do have a low credit score, like 640 or under, and we aren't able, you can always fix that. So sometimes it might be, I've seen people that have medical bills that are on a person's credit report that are potentially in collections, but you honestly had no idea that this was even billed to you. It happens, I wouldn't say all the time, but there's a lot of times that I do see collection accounts out there that are medical bills that people honestly really, and I believe them, did not know were out there and had even been sent to collections. So those are something that's easily remedied to correct. You have to go through the credit union, or not credit union, sorry, the credit agencies. But usually if you can get a collections account taken off, it really bumps your score back up relatively quickly. Let's see here. I guess we can move on to the second C in the 5 Cs, which is the capacity and cash flow. So what we're really looking for is, does the business make enough money to pay all of its bills, including the new loan? It really is not all about cash flow, but it's one of the primary things that we look at when we go through underwriting is the cash flow of the business. We also like to kind of call cash flow like debt service coverage, if you've ever heard of that term. So the amount of money that you make or expect to make should be sufficient to pay all of the expenses. And we also kind of like to see that there's a little bit extra in case something unexpected comes up. If you ever hear us talking ratios, like a 1-to-1 ratio, that means that what you bring in as far as your income then pays for every expense that you have. So that's fine, but we like to underwrite to at least like a 1.25, because that 0.25 then is that extra that we like to see in case something unexpected would happen. So we never like to write to when you're just breaking even every single month. We don't feel like that would be prudent for us to do in a lending situation, is just to have you break even every month with a loan that we would give to you. All right, next slide is also cash flow capacity. So existing businesses, it's easy for us to look at because you would have tax returns, you would have balance sheets and profit and loss statements that we could really look into to understand exactly what your numbers look like. If you're just starting out, then we really rely on a business plan. So not to hammer home on business plans too much. That is not what this presentation is about. But just really take your time in a business plan, because it's really the roadmap and kind of the only document that we have as a financial institution looking to put a loan in place for you. So we really need to make sure that you are understanding your projections, the revenues, like honestly how much you're going to need to spend in expenses. Like we really, like the last bullet point is best case and the worst case scenario. We really do like to see a well thought out business plan, because, you know, it's just projections and assumptions are just that. So we do really like to see that you have really had a lot of considerate thought put into a business plan. All right, so the next slide, we will get into collateral and guarantees. So like we said a little bit earlier, the collateral is something of value. If you would go get like a car loan, that collateral is the car. You wouldn't have got that loan without some type of collateral. It's the same thing in the business world. We are looking for items of value, that we know that if the business can't pay the loan based upon its cash flow, then we go to the backup plan. We would have this piece of collateral that we could liquidate and then apply back to the loan. A lot of times for business loans, it's the business assets that are pledged as collateral. Sometimes it's if you have equity in your personal residence, we'll ask for that. We also ask for guarantees. So for the way that the SBA does it, Bankers Trust, if you're an owner of 20% or more, you are required to be a personal guarantee on the loan. And so basically what that means is that if the business itself can't continue to pay on the loan, if we liquidate the collateral that we had and there's still something remaining, then we will look towards the personal guarantees on the loan to then make this loan whole. I think that, yeah, that's pretty much it for collateral and any guarantees. The next slide is the capital and contribution. I like to call this the skin in the game. We like to see that you have, as the owner of this business, are putting some type of your own equity into your business. We are not going to lend you 100% of whatever your lending needs are. I guess if we do like an equipment loan, we would, but we really like to see you have invested in your own business. If you want us to invest in your business by giving you a loan, we also like to see you have invested into your business as well. It just helps shows us the commitment. Also, then it's risk on you. So if you have, some skin in the game, you really don't want that business to fail either because of what you have, put on the line, what you have at risk as well. Traditionally, if you don't have enough collateral, equity, sometimes you can get turned down for a loan. Like I said, we do a lot of SBA lending at Bankers Trust. So just know that that's kind of what the SBA program helps lenders to do, is if there is a lack in collateral, a lack in just any type of contribution, we can also help say yes to that loan request by looking into SBA programs that just help us to not feel as though we have so much risk out on that loan request. All right, and then the fifth C is condition, which is like the loan amount, the interest rate, what are you going to be using the loan for, fixed assets, inventory, working capital, and we'll also kind of look into your industry and just kind of see like on average, on whole, how is your business's industry doing in whatever climate we happen to be in. All right, so the loan application process. Once again, I kind of like to think about if somebody would come to you and ask you for a loan for their business, kind of think about how you would expect that conversation to be, like what you would expect from that person. So we just like you to be well prepared, that you have thought out, written down steps and plans, because we don't know anything about your business. We don't know anything about your hopes, your dreams, where you see yourself in 5 years. So we just need to know all that so we can help understand exactly the best way to structure any type of loan request. And like, again, telling your story, it just really helps for us to, not because we're being nosy, but it really does help us to better understand everything that we could possibly need to know. Weaknesses aren't necessarily something that's going to be denied. Everybody has weakness. Every loan request has some types of weaknesses, but just for the the full picture, if it was you lending money to somebody that requested it, just think about what you would want to know and have them disclose to you, kind of the same thing as lenders, just so we can fully understand what is going to happen with this business. Because like I said, we don't want to get into a place that we put a loan structure in place that then ultimately doesn't really do you any good and does you a disservice and is actually like, crippling your business. We would hate for that to happen, but sometimes it could if, not all the cards were laid out on the table. All right, sorry. Next slide. So you are preparing to ask for a loan. Business plan, resume, got those good graphics there. But also, if you yourself are going to have any type of key employee or key manager, it's really good to include them in like their expertise, like what they do. It's good for us to understand that as well, even if they individually might not be part of the loan as far as like personal guaranteeing. Still don't rule out giving details about any of your key managers, key employees to us as well. All right, next slide is the basics of your loan request. So of course, we need to know how much money do you need? And that is something that I know sometimes businesses don't quite understand everything that goes into the underwriting of a loan request, but we aren't able to move forward with a loan request if a business comes in and says, well, how much can I get? That's not how it works. We need to understand, what you're asking for, because there's always a reason why you're asking for the money, like it's going towards something. So we need you to tell us what that money is going towards. So like, are you wanting to buy real estate, equipment? Do you just need it for working capital? Because you just need to keep up on the daily expenses like rent, salaries, inventory. If you're a service industry, you go to your customers, you do whatever type of service that you have with them. Maybe you have payment terms and they have 30 days to actually pay that invoice back to you. But in the meantime, in that 30 days, you need to have paid your employee that went out and, completed that service. So working capital can be used for that. So that's why we need to understand, what's this loan request? How much do you need? Like, we're not going to tell you how much we can give you. I mean, we might correct you if you have a loan request that you just really can't afford. We'll let you know that we can improve that because it doesn't make sense in the numbers. But you have to start somewhere with a request that includes like, how much do you need? All right, so the next slide then is kind of looking into a term loan or a line of credit. And I know sometimes as we talk through a business and all the needs that business has, sometimes we start with the term loan, but then we're kind of, as we get through the details, maybe switch it up and a line of credit would be a better fit for this business. So a term loan is similar to, in the consumer world, you have an auto loan, you have a mortgage. It's a fixed amount of money that you will pay back during a specific time period. So in your house, you get a 30-year mortgage. So you have 30 years, your home will be paid off, kind of like an auto loan. 5 years, that auto loan's paid off. Same thing in the business world, we'll do a term loan, and we will, the term of the loans are usually structured around the useful life of whatever our collateral is. So if you're doing real estate loans, of course, it's longer. Equipment loans, we look at what that piece of equipment is and what the useful life of that equipment is. If you have a piece of equipment that the useful life is 5 years, we're not going to give you a loan for 7. That we just wouldn't be able to do that. A line of credit, kind of think of a line of credit as a big old fancy credit card that's attached to your checking account. So let's say we have a $25,000 line of credit. What that allows you to do is just borrow up to 25 and then pay it back down. Borrow up a little bit, pay it back down. A lot of times lines of credit are used in like the retail businesses to purchase inventory because you got to purchase inventory to be able to sell it to your customers to make the profit. So you need a line of credit so you can make a big inventory purchase, then you mark it up, put it on your shelves, sell it to your customers. So then as soon as you have sold that inventory, you should have a bunch of profit, but then you can pay back down on the line of credit. And then the cycle goes all over again when you have to buy your inventory. So then you can sell and make your profit. Lines of credit can be used for other things, so that was just a good example. All right, the next one is, so how will you pay the money back? So we will look into your monthly loan payment, of course, the maturity of the loan, and then the collateral that's pledged against that loan. I pretty much covered all this in previous slides, but just once again to recap it, we look into the loan payments, the maturity, what's our collateral, just to make sure that it all makes sense. Next slide, we also then just look at the financial condition in a whole for your company. If you've banked with us previously and you already have checking accounts and things, we'll take into consideration just the overall state of the checking account. You know, have you had any overdrafts? Does everything look like it's being paid on time? There's not necessarily like business credit reports to pull for us to be able to see, kind of like on the personal side. We can pull a personal credit report and we can get, you know, a good idea on the personal level. There's not really so much of that in the business world for like your business to have a business credit report attached to it. But we do still think through, you know, do we feel like the company's overall financial condition is positive and is things being paid on time and that kind of stuff. All right, so the next slide goes into how much should you ask for? So we also like to think through short-term needs and long-term needs. So it really just depends on how much do you really need? Are you trying to just get over a hump? So that's more short-term. A lot of times we can make those more a line of credit situations that's more flexible. If it's really to get you over a few years, that's more of a long-term. It's a really hard question to think through that only you can answer. And so a lot of times it's best just to like sit down with any resource partners in the community that help, you know, businesses, like a business consultant really helps. We just, you know, we're not the best place to come to tell you how much do you need. That's, you know, more for you to answer because you have the long-term vision of where you are taking your business. So we're here to help and have that conversation, but just know that there is other business consultants that would have a better conversation with you around the long-term goals of your business and what that looks like. All right, so onto the business plan. Like I said earlier, it is really crucial to have a really good thought out business plan because this really is our roadmap of you explaining your business, like your strengths, your weaknesses, like market opportunities, you know, your competitors in the market. That's where you lay out you as the business owner, your strengths and weaknesses, your management experience, your key employees. It's really, really crucial that this document is well thought out, especially if you're a startup. This is kind of like where you lay it out on the table so we can completely understand everything that you are looking at for your business. Down below, the SBA has some good business templates. The Iowa Center is really good about helping with business plans. The SBDC that's in Valley Junction is also really good helping with business plans. So there's lots of resources out there that help you with business plans. Next slide. Oh, well, there we go. I just talked about the next slide. So you have your small business development centers. The Iowa Center, of course, helps. Chambers might have, depending upon a chamber, they might have some business plan help. Accountants, business consultants, sometimes local colleges and universities also might have some business plan services that you can take advantage of. All right, the next slide is kind of getting into the financial information of what you need. So we'll need a balance sheet. A balance sheet is kind of telling us about the assets of the business, like what you own, what you have out there in debt. A balance sheet is kind of like, I guess more or less, kind of like a credit report, I guess, but you have to provide the information of like if you have other debt out there, is it short-term, long-term, like who is it to? The income statement is kind of like in the personal side, it's your W-2. The income statement is like how much have you as a business made year to date. Tax returns, of course, we look for tax returns because we want to know that you are filing taxes. And also then if you need to put any projections and assumptions in there for what's coming down the road or where you want to be at. Of course, if you're a startup, it's all based upon projections. We like a well-rounded 3 years to look at typically. If you are a startup, you will have to usually your first year of when you're putting together your projections, we like a detailed breakdown of month to month for the first year. And then you can annualize it for like year 2 and 3. But we still like to see 3 years on any type of projections and assumptions for startups. And then if you're an existing business needing a loan, we like to go back 3 years, if at all possible, to get a good picture of where you've been and to see, how you did year over year. Next slide is preparing your financial reports. So, it is a lot about numbers for us in the banking world. So we do need to make sure that all of the financial reports that we get are accurate. There's a really good accounting and bookkeeping software that's out there that can really help you to make sure that you're getting everything accurate when you're recording all of the numbers that go into your financial picture. Of course, accountants, business consultants can help with that as well. We really do need to know accurate numbers when it comes to looking at the overall financial health of your business. All right, so next slide is the cash flow projection. So this is a lot of, for like startups, I guess it could be for existing businesses if you are experiencing, or if you want to grow, and that's what the loan request is for. Just be really reasonable with your projections and assumptions. Biggest trust, we're a kind of a conservative lender. So we just really like to make sure that whatever assumption and projection that we're thinking through, that we're not going to be too aggressive, because we would hate to have a loan structure that would be detrimental to a business down the road. So just make sure that you are looking through industry data that can just help ensure that you are being reasonable with any type of projection and assumption when it comes to the numbers that you're putting into your loan request to back it up. And the next slide is, yes, definitely know the details, which includes the numbers. It just helps us to feel as though you yourself definitely know the ins and outs of your business, but also just that way you know the numbers to your business, so there's no surprises down the road as well when it comes to affording a loan request or thinking through growth, those types of things. Next slide. So we look into the trends of your financials. So we look at your sales, Are they moving up, moving down? Why is that? Operating expense, up, down, net profit, up, down. Because sometimes the numbers alone don't tell the story, that it's ratios. So maybe your, maybe your sales are moving down, but your net profit is moving up, which could be because maybe you are just being more thoughtful with the jobs and the bids that you are taking, and you are bidding them and pricing them better. So maybe your sales look down, but your overall net profit is moving up. So we do look at ratios as well, because sometimes the numbers alone don't tell the story of your business. Next slide is just some more financial information to think through. So expense control. We just kind of always want to make sure that your profits and your expenses are kind of mirroring each other, right? I mean, more profit is really good, but it does take some money to make money. So we just want to make sure that your profit and your expenses are kind of mirroring each other, depending upon the situation that is going on with your business. I know sometimes in the beginning, if you're starting out on a new endeavor, sometimes your expenses are higher than your profit, but kind of like on that second graphic, but eventually your profits keep going up and your expenses then flatline and kind of start going down. Next slide, debt to equity. So in the consumer world, if that is more familiar to you, like debt to income ratios, same thing in the business world. We look to see what type of leverage a business has, to see if you have any money to kind of weather any storms. This is kind of a little snapshot of a made-up balance sheet, but we kind of look at your assets, your liabilities. We like to see how much equity is put into the business, whether it's, from like yourself, or if you have any like other partners, shareholders, that kind of stuff. We will look through that just to see, what is the balancing act between the debt you have out there and the equity that you have in your business. Next slide deals with cash flow. And if you haven't really heard about EBITDA, yes, you will. EBITDA is short, acronym for earnings before interest, taxes, depreciation, and amortization. So we know that when we're looking at your tax returns, the name of the game with tax returns is you want to try to show the least amount of income possible, because that means the littler amount of the taxes you'll pay to the government then. So we know that when it comes to your income, when we're talking about the taxes, the depreciation, that kind of stuff, we can add those back into your income to get a better idea of where you were at for that year. So that is what we look at. We look at EBITDA, not necessarily just your net income line off of a tax return. Next slide then, just to touch quick on debt service coverage. So that is just another fun bank term that just helps us understand the ratio, kind of like I talked earlier about like the 1-to-1 ratio. We like to do a debt service coverage that covers all of your debt, but then still leaves some money for the unknown. So in this little scenario, the 1.92 times for that bottom debt service coverage ratio, that's actually really good. So that means that they have 0.92 extra to cover all of their debt. And in the most banking scenarios, banks like to see at least a 1.25. So in this case, they're pretty healthy when it comes to their debt service coverage ratio. But how we figure that is we take your net income, we put all of the EBITDA stuff back into there, and then we look through your balance sheet to see what existing debt you have out there. We factor in your new loan request, and then this is more on an annualized basis. We look at it on a business level. Consumer world, your debt to income is more of they look at it more monthly. Anyway, so that kind of goes into the underwrite. And then that is the last slide. I hope I haven't bored you too much, and please, if there's any questions, let me know.
That was so much great information. Lisa, thank you so much. Having spent some time in retail banking, it struck me when you were talking about debt to income. That was a big thing that I experienced in the lending process. So many people walking in saying, here's how much I need. Don't worry, I can afford it. And then they get that debt to income ratio back and the bank says, I'm sorry, but we don't feel comfortable with that. And it's frustrating for all parties involved because maybe you could really end up paying that off, but ultimately this is a calculated risk that the bank is making, right? And so ultimately that just means that they weren't comfortable enough to lend you the money. It doesn't mean that you can't get the loan somewhere or that you should give up on whatever you're trying to achieve with it, that you're going to need to maybe visit another couple institutions and or get a little more creative with the way that you get to the goal that you're pursuing by getting this money. Sorry, that was a rambly point, but brought back old memories.
No, it was a very, very
like you
good
said,
point.
like you said, a lot of the community banks and credit unions around are so much more conservative with their lending profiles since 2008, especially. So it's hard. It's hard for everybody. Kind of on that point, I wanted to ask, when you were talking about how much to ask for, let's say that I've crunched all my numbers, I've used all of my fancy spreadsheets, and I think that I need, for a round number, $100,000. I'm not, obviously no one can be totally sure exactly how much you'll need. There's always hidden expenses and twists and turns to your story. Would you recommend asking for a little bit less than that if you're close, if you're bumping up against that debt to income ratio? Would you ask for a little bit more? Which side do you err on as a lendee?
I would say, if $100,000 in this situation is really what you need, but it might be bumping up on any ratios, I would still just say, just keep it at 100,000. If that's what it's going to take, the conversation can always be had, down the road when we get through all of the underwriting and we realize that the ratios are off and, not something that we can approve. It's not like we don't continue to have a conversation on, okay, so we can't do 100, and, let's talk about this. Maybe like 85,000 is what meets the ratios, but does that get you the business where you need to be? And if that answer is no, then maybe you'll have to go back to the drawing board and refigure stuff, knowing that you can't get the $100,000.
Another reason you should be itemizing.
Don't feel.
Sorry, go ahead.
Oh, I was just going to say, at least in my experience with the banks that I've worked for, especially Bankers Trust, like we don't just say no, we can't help you unless it's like a credit score thing. If the numbers aren't, like if your ask isn't lining up with what we're able to approve via our bank policy, our guidelines for our lending policy, it's not like we don't continue to still have the conversation on how can we still move forward, if that makes sense.
And it's another great reminder that you should be filling out with as much detail as possible all these financial templates that we talk about all the time, your P&L, your balance sheet, so that when you are presented with something like, hey, we can't do 100, we can do 85 though, you can take that out and say, well, what can I cut? And you already have everything lined up and really easy to see what you could potentially get rid of, right?
Yes. Yep.
What would you say are the biggest recurring issues you see with loan applications? What's the maybe one piece of wisdom you can give people applying for a loan at a bank?
I think a detailed, defined collateral. A lot of times we get a loan request and we have to then go back and ask about collateral, ask about, I mean, I guess right in line with collateral would be the cash injection, you know, like a down payment. It seems like those sometimes aren't always thoroughly thought through beforehand. And it just kind of sometimes stalls our ability to even really start on the loan request if we really can't quite understand how we're going to secure this and, you know, what the skin in the game is coming from the owners.
Excellent piece of advice. I know we are running out of time here, so I want just one more quick question for you. If you can, if people have PPP questions on the second round coming up, how do they contact their bank to get those questions answered? And who do they talk to? What's the question that they need to ask?
Well, right now with a bunch of unreleased guidance from SBA and Treasury, the banks aren't going to be able to answer your questions in full detail right now. But for Bankers Trust, we try to spread the love. So our business bankers, are like the managers on all of our retail branches are all pretty dangerous in the way that they are able to answer questions. I will say that if you received a PPP for the first draw and you need a second draw, it's a lot easier to just continue with the financial institution you got the first draw from. It looks like some of the guidance coming from SBA is if you're using the same institution, you don't have to maybe provide as much documentation on the second one if your lender has that from the first draw. I don't know how all banks are working with PPP. It's definitely something that is a whole new program that's added to everybody's day-to-day job. So we have tried to take a big approach to get more people involved, so we are able to answer more questions quicker back to borrowers, because we know that everybody is really trying to scramble for money right now to keep themselves up and going.
Thank you for
I
answering.
would tell you to go to the SBA office normally, but I know that our SBA office is inundated with questions coming directly from lenders. So unfortunately, as fabulous as our district office is, they're just swamped. So it's probably easier to go to a bank to ask questions.
And we're always happy to answer questions as well when we can, where we can. Okay, that's all the questions I had. Lisa, thank you so much for being with us today. I really appreciate the huge amount of information that you've shared and the time that you've shared with us as well. Just a reminder to everybody on, my colleague Ben Schultz will be sending out a follow-up email to everyone. It will include a copy of the PowerPoint that we walked through today. And we talked about a lot of different financial templates, balance statement, profit and loss, all that stuff. I don't want to spam everybody in case you already have all those things. I don't want to just send them all out to everybody. But please, if you are interested, get a hold of me or Ben or anyone else at the Iowa Center, and we'll be happy to send you a copy of those. They're very handy to use. And if you have any questions about how to use them, again, we're here to talk about that. I think that's it for us right now. Make sure that you tune in for next week's Small Business Essentials. We're going to be talking about taxes in the IRS, that thing that we try to forget about until it's time to do it every year. So please tune in next week. Again, thank you so much, Lisa Moss from Bankers Trust. It's been a great pleasure today talking to you. Have a great day, everybody.